SOFI update here on the 17th. So we finally got some consolidation this week, and pretty big consolidation. We're down 10% on Friday. Nothing to be concerned about. They did some downgrades, but that doesn't have any effect on the stock long term. Those are just ways to control the algos, basically. And we're doing a fourth wave here. So I see two different paths for this move to play out. If we zoom in here on the 15-minute chart, and this might be different on the log chart. Let me see. No, on the log chart, it actually hit perfectly. So this is either the fourth wave or it's the A wave. So 4 or A. If it's a fourth wave, then obviously we go up and make a fifth wave. If it's a wave, then I'm looking at something like this probably. And I would be looking for, I think, 773 on the log chart. Let's see here. So log chart would give me 758. And on the arithmetic chart, it's a little bit different. It goes down to 742. So they're a little bit different. I usually use the arithmetic chart first, and then if it breaks outside the parallel line, I go to the log chart. But those are the two options. We're either going to do an ABC move like that, or we're finished with the fourth wave here, and we're going to go to new highs right away. Those two options are two different things. The first one would be a normal 5-wave move. We did not make it to the 1.61 fib, which is a normal third wave, which is fine. It doesn't always go there. It is still a valid third wave. And if we go to new highs here, I would be looking for, on the arithmetic chart, I'd be looking for 1153 to 1220. On the log chart, you're looking at 1310 to 1464. So you can see the log chart gives you slightly larger targets. That's why I usually use arithmetic first, because I don't want to be going for a larger target than what happens. But this would be a normal 5-wave move. This would just be your average 5-wave move. The fourth wave did not come into the first wave. If we get the ABC move down here to 760, we came into the first wave, then it's a diagonal. Same structure, different structure, but same 5-wave move. So those are the two options. You could look at it like an ABC move too, which that would just be A, B, C. The problem with that, though, is that implies that we have not bottomed yet, because we would just be making a corrective move higher. You want to see an impulsive move higher. And so I don't think there's any chance of it being an ABC move. It's got to be either a diagonal or a normal 5-wave move. So yeah, that's pretty much what I see. And a few thoughts on this move too. If we go higher into earnings in August, then that would not be a good time to go long. You would actually want to be pretty defensive, because this 5-wave move would be finished, and it's most likely that earnings would actually be a catalyst for a sell-off, along with student loans starting at the end of August. If we sell off down here and this takes a while, and then we just run up like a little bit, and we're like right here, then obviously you want to be long, because we're probably going to go all the way up to here. So those are kind of the timing aspects of it, but it should be pretty obvious where we're at in the chart once earnings and student loans come. And then another thing to think about is if this is a 5-wave move, we go to 13, 14 bucks, maybe 12 bucks, then we're going to get a second wave pullback after that. That's going to take us all the way back down here to a minimum of like 820 on the log chart, maybe even farther than that on the log chart. So after this move's finished, a lot of people are going to be complaining again, just like they are right now. The people are already complaining about a consolidation after we ran 130% in a month. So people that don't really read charts, they just are mad whenever it's down, no matter what. So the next move higher will be the final 5-wave move here, and then we should get consolidation. The move that's going to take us to new highs that everyone's looking for is the move after that. So let's say we go to 1220, consolidate down to 820. The move after that, on the arithmetic chart, minimum we're looking at 1709, but the third wave could go all the way up to 25, 32, and then you switch over to the log chart, and you're looking at a minimum of 23 for the 1.61 fib, 66. I don't know about that. 188 seems pretty high, but that's the thing. Those third waves are the ones that are really explosive, and they go past any target that anybody can think is imaginable. So right now we're still just in the first wave, in my opinion, and this will probably end sometime in like September or October. You can actually draw a parallel line here too. And we got February 2nd, June 14th, so maybe sometime in October we're at 1230, something like that. So yeah, there's still a reason to be bullish, and then the other thing to look at is the moving averages. Moving averages look great. 20 is still above the 50 and the 200. 50 is above the 200. And even if we consolidate down here to 740, I would imagine that the 20 will stay above these two. And if we see something like this and bounces off and goes higher, that's exactly what we want to see for the next move higher. So that's pretty much it for now. I'll do another update when we figure out if this is going to consolidate more or if that's the end of the fourth wave. I would say I'm leaning towards more consolidation because the overall market, I have that selling off over the next month or so. So we'll see if I'm right on that or not. But I would be prepared for 740 to 760. Worst case scenario, I think, if we sell off in the overall market. So anyway, I'll leave it at that. Give me a thumbs up if you like the video. Subscribe for more content. I'll probably do an update when we figure out what's going on next. Anyway, have a good weekend.